Welcome back to another edition of This Week in 3 Minutes. I probably should call this one This Summer in 3 Minutes, as I've been away, and I hope you have too. I hope you all had a wonderful summer. And now let's get to it. We're back, and things are going to get really, really interesting in the coming weeks and months. And I'm not speaking, with hyperbole here, but we'll get to that in a second. On a technical standpoint, when looking at the price of gold, we would be wise to look at this very large cup and handle pattern where the last several months, or since April or May, the price has been in declining form of a very, very nice handle, suggesting that the turnaround for this is going to be quite substantial in terms of the price of gold going forward in US dollar terms. I don't know exactly what it's going to do in yuan, but we'll get to that in a second. What else happened over the summer? Let's see. The world stopped reporting the price of gold in terms of spot price. I don't know why, but they switched to the futures price. And oddly enough, the COMEX has launched a precious metal spot spread contract where you can play the spread between the spot price in London and the futures price in the US. I'm sure there'll be some savvy traders out there making a lot of easy money on this arbitrage spread contract, which could in part impact the price discovery on the metal. We'll see how that all plays out. I'm trying to wrap my head around all that. Let's see. We just passed the longest recorded consecutive bull market without a 20% correction in modern history. And Goldman Sachs bear market or bear risk indicator is flashing red, saying it hasn't been this high in 10 years, which of course was exactly where we were before the start of the last financial crisis. There's all kinds of rhetoric going on politically with regard to sanctions being ignored and more sanctions being brought in. If you'll recall, when the Chinese launched their oil futures contract denominated in yuan, the following day the U.S. launched a whole bunch of trade sanctions. Well, guess what tomorrow is? Tomorrow is the first day, I believe, these oil futures in yuan begin settling, and it's also most likely the day, it's Thursday night I'm recording this. Thursday night here is the last day for the Chinese to respond to the U.S.'s desires and wishes. Otherwise, a whole batch of new sanctions are going to be imposed on China, and the escalation of tit-for-tat tariff wars will continue. So, why is this so significant, that the Chinese currency being used to buy oil? Who cares? What has that got to do with the currency markets and gold and all that? Well, it's huge. I'll tell you why. The total global energy market represents $9.1 trillion in energy consumed per year. I'll say it again, 9.1 trillion. The total world GDP, all countries, all businesses, everything being consumed, about 65 trillion. So we're talking better than 15% of global GDP represented in the energy market, and 50% of that occurs in the Pan-Asian countries. 50% of the energy consumed is in the Pan-Asian countries, meaning until now, all of those other countries had to buy US dollars to buy energy. And now they're going to have the opportunity to start using the Chinese contracts, Chinese currency. And every time someone uses the Chinese currency, they don't use the US currency, which makes their deficits get even bigger. It has to do with something called a carry trade. Bottom line is we've crossed the Rubicon. It was in the 1970s when the world started using only US dollars for energy, and it has enabled the US government to run these massive and outrageous levels of debt and been able to fund them going forward. So if the US starts to run into problems with not enough money coming in to buy their treasuries, they're going to start printing. And of course, if they do that, that's going to impact the global view on the value of the US dollar, and we're going to get major currency volatility. And of course, all these traders that have closed out their short positions on gold and closed out their long positions, it's like a ghost town at the COMEX right now when it comes to gold contracts. I think that's going to change in a hurry in the next weeks to come. So forgive it, I ran a little longer than 3 minutes, but I had a whole summer to catch up on. So stay tuned. I think this is going to be a fall to remember, and we'll see you next Friday. Cheers for now.